Imagine this, a chai vendor in Ghaziabad gets a rupees 5 lakh business loan within 15 minutes and no banker, no paper file, and no visit to the branch. How? Because of an algorithm, not a human. It decided he was trustworthy. Yes, you heard that right. In today's world of artificial intelligence is quietly becoming a new loan officer, a new credit officer. Welcome to the revolution in MSME finance, where your data speaks louder than your documents and your digital trail tells your entire credit history. Now, I'm Sangeeta Sharma, and in today's episode of Smart Credit Bytes, we are going to learn how AI is transforming MSME lending, how banks are reading your data in real time, how fintechs are reshaping the credit access and the traditional banking, and what does this mean for your business, your credit health, and your future? So grab your chai and let's start. For decades, banking was built on human judgment. We trusted the branch manager's handshake, a relationship officer's word, the balance sheet numbers. But something has changed over a few years. Technology stepped in quietly and first to assist, then to analyze, and now it has a decision making power. Today, almost every loan you apply for is first read by the machine. Every EMI, every GST filing, every UPI payment. Somewhere an algorithm is learning about you deeply. Now, it's about building what we now call your digital credit DNA. Yes, you heard it right, digital credit DNA. It's a real time living record of how your business behaves financially. And you know what is the fascinating part? This DNA speaks more truth than any document ever could. Yes, if your cash flow is clean, your payments are on time, and your taxes are regular, AI knows you are a good borrower before you even walk into the bank. But if your records are erratic, you file GST returns delay, or if imagine this, if your invoices go unpaid, AI will just flag you before any human officers even opens your file. So, what exactly is artificial intelligence doing here? Let's break it down simply. AI is not replacing bankers, but it's replacing bias. Believe it or not, bankers and human have some bias part. Okay, now this AI, artificial intelligence we are talking about today, it uses machine learning. It is trained on millions of your past loan cases, your bank account statements, your taxes, your digital presence. Now, to detect patterns to invisible to human data, completely invisible to humans, they check your data on the bank end. Now, here's what AI now does inside lending institution versus your credit scoring. It goes beyond CIBIL to assess your real-time cash flows, your digital transaction, and even your GST data. Next, it does is predictive analysis. It forecasts your repayment behavior by analyzing your spending, your income seasonality, and your most important is your payment habits. It also helps in fraud detection. It flags anomalies like mismatched invoices or sudden cash surges within seconds. And the most important one, the good news for you is smart approvals. It uses algorithms to pre-approve loans automatically for business that meet the key criteria or policies of a bank. Now think about this. Earlier, your banker would do all this manually, review your 3 year past balance sheet. Now AI can scan your thousands of data points now across your GST bank account, ROC filings in seconds and score your risk level more accurately than ever before. And most importantly, it does this in real time. Yes. Now every credit officer asks, can this business repay or are they reliable? What are the red flags I should consider? And same goes with the AI. It asks the same question, but it has already the answers with evidence. Yes, it analyzes your GST filing frequency and accuracy, is your bank statement, cash inflows versus cash outflows, your invoice payment timelines, your vendor and customer diversity, your digital payment history, and even your accounts fluctuating nearly EMI dates. Now, it's like having a banker who never sleeps and never misses even a single detail of yours. It never judges you emotionally. But this is crucial. AI is only as good as data it sees. Garbage in and same garbage out. If your filings are inconsistent, if your records are outdated, AI will assume your business is risky, even if it is not. So, what is the rule? Rule is very simple. Be digitally clean, and AI will see you as a credit worthy. And the day is not far when AI will completely take over the decision making power. And if for that day you need to prepare yourself from right now. Okay, now for small businesses, this change is both an opportunity and a wake up call. What can be the opportunity? AI makes credit decision faster, fairer, and more inclusive. It does not care about your background, context, or size. It only cares about your data. That means a small tailor unit, suppose say in Lucknow, which has consistent digital sales, GST filings, can now get working capital without collateral, even faster than a 20-year-old firm which has sloppy records. What can be your wake up call? You can no longer hide behind the papers. Every online action leaves a footprint, and the footprint forms your new credit phase. Yes, so instead of thinking my balance sheet looks fine, start thinking, does my digital trail look healthy? Because that's what the future banker will see first. Now, you have heard about earlier five C's now that were character, capacity, collateral, capital, and condition. But AI has upgraded data to a new digital version. First C means cash flow patterns, your daily inflows, outflows across your GST and bank account statement. Second C says compliance behavior. That means you file your GST timely, your TDS timely, your ITR are filed timely. Third is your credit footprint. We can say like your digital payments, your QR collection, invoice history, and fourth C is communication signals. Yes, your responsiveness to your customer, to your vendors, your professionalism, and even your customer feedback. That's most important. Now, fifth is your context data, your industry health, your regional trends, and even your seasonality. Now, AI does not just look at your business, it looks at the ecosystem around you. That's why two identical businesses may get very different results because one is digitally consistent and the other is not. So you need to be careful now. Now let's see how this works in the real world. Let's take two cases. Suppose say one case is the digital dairy owner. Okay, dairy owner. Sorry, a dairy owner, suppose in we can take example of Gujarat. It has registered every milk supplier payment is through UPI and tracked invoices on his Tally, a proper accounting software. Now when he applies for a loan, AI verified his payment consistency and approved his limits within minutes. Now let's take second case. Say the old style fabric trader, a traditional textile trader, is same in Surat, Gujarat. They still rely on their manual ledgers, occasional bank deposit. Despite their decent turnover, they lack digital records, and the AI flags him as a high risk, and his loan get delayed, deferred. What lesson we learn from this? This is the lesson of today. Through this is AI always rewards transparency, not the size. Now look at some actual example. Let's look at some actual example. First is SBI Yono. It uses AI based algorithm for small MSME loan under 10 lakhs, and this is scoring is based on your completely on your GST and transaction data. ICCI InstaOD, they also analyze your 12-month current account current account behavior, and they provide you a pre-approved limits instantly. And sometimes this limit is inbuilt based on your transaction data. It changes, and same goes with the HDFC Biz Circle. They use your AI to scan sector data and auto adjust your credit limits in real time. And we have seen fintech companies like Lending Growth and Neo Growth. These fintech companies use AI for even for in underwriting. They analyze online invoices and sales pattern to offer their borrower collateral free loans. Now, if an RBI's account aggregator framework is also AI powered, it allows secure sharing of your financial data within banks. But of course, it's after your consent. But can you tell me, if you apply for a loan and a bank asks for your consent, do you have any uh, condition of saying no? No, right? You need to share your data, as in like you have install any app or anything. You get a. I read completely. I have read and I agree to the privacy condition and terms and statements. But you have no choice to leave it unchecked, right? Sure. Now, same as goes this, you need to give your consent, and this RBI's account aggregator framework, it uses AI powered, and in real time it extracts your information from the other banks. Now, in short, I can say data is the new collateral. I've already made a video on this. You can check out on my YouTube channel. Now, uh, let's say, will AI replace credit officer? This question is always in everyone's mind. Obviously, no. It will just redefine their role. AI will handle their heavy lifting like analyzing risk pattern and compliances earlier, which were done by human, and it took days for them to do that. Now, human will handle the judgment part, assessing the intent of the borrower, their vision, and their character. Now, this hybrid model is the future. This hybrid model will be the future of banking. Faster, transparent, and still human part is involved. Now, as I always say that AI can process your data, but it cannot read the dreams. And every MSME is built on dreams. Every startup is built on dreams. A dream is converted into action, right? That's where human bankers and trusted advisors like us still matter. Now, if you are an MSME owner listening to my podcast, here's what you must start doing right now, right today. File your GST on time, set your reminders, automate your payment, do whatever it takes. Shift to digital invoicing, payment and payment collection. Please, please, please use accounting tools like Joho Books, Tally, and Profit Books, and keep businesses and personal accounts separate. This I have said ever. Please keep it separate. Build your online presence, and that reflects credibility. It can be a simple. If you don't want, you can simply, there are many digital marketing agencies. You can hire them. They can build your online presence on your behalf. Please remember, your discipline is your new data capital. AI does not just analyze your transaction, it senses the consistency, the transparency, and the integrity. Now, see, AI is not your competitor. It's just a mirror. It shows you your real-time image. It reflects exactly what you saw. Clean data brings fast credit. Messy data brings red flags. So next time when you apply for a loan, think beyond balance sheet. Think about your digital story, about your digital library. The one AI is already reading in real time. Now the future banker does not ask, who do you know? They will ask, what does your data show you? Now, this is an era of smart credit, and those who understand it early will lend tomorrow's MSME revolution. This is Sangeeta Sharma, and you are listening to Smart Credit Bytes, simplifying MSME finance and one bite at a time. Thank you.